Qualcomm have just released their third quarter earnings for 2022, and we are going to be going through these numbers right now. Then we're going to be putting these numbers in my discounted free cash flow model, my buffer Graham intrinsic value model, and we're going to be getting the fair value of Qualcomm to see if this stock is a buy or a sell. You can see the market isn't reacting too favorably to those earnings, down 3.6% in the aftermarket to $147.90 a share. If we go to the year chart, it is down from its all-time highs at 190, but it had made a strong rebound since about June. But is this the time to buy? You can see it's gone down even more to $148. So let's get into it. We have the 3 months ended and the 9 months ended. We're going to be focusing on the 3 months ended because I'll be talking about more of the stuff in detail when we go on my sheet. But let's see what's happening. So revenue has increased 8 billion to almost 11 billion, 10.9 billion, so that is up. And then we want to look at the profit, which is net income here, and that is up massively, 2 billion to 3.7. So that means the earnings per share is up, as you can see, $1.80 to $1.32. Excellent to see. It looks like it's improving. It might have missed estimates, but it looks good on the initial look. Then we want to look at the shares. Are they buying back their shares, issuing more shares? And you can see Qualcomm is actually buying back their shares, as this is 21 and this is 22. Why is this good? Because if there are 10 shares of the company and you own one, you own 10% of that company. Now you couldn't do the maths. If they issue 10 more shares, you would then own 5%. If they bought back those 10 shares, then bought back 5 shares, there would only be 5, and then you would own 20% of that company. So you want more of the revenue. And then what we want to do is look at the the free cash flow, which is cash from operating activities minus capital expenditures. Operating activities is here, and it is down 3.3 billion to 2.9. And you can see the capex is up slightly, but about $500 million. So about 2.3 billion on the free cash flow for the quarter. So now we're going to head over to my spreadsheet here. You can see I've already loaded everything up. We've got Qualcomm here, we've got the price, we've got the market cap. We do have some analyst target price here, 135, and it's currently, as we just saw, at 148. Average price in a year is 185 and 250. So analysts say this is a can't miss stock, really, to be perfectly honest. We have the 17, 18, 19, 20, and 21 earnings here with the trailing 12 months, but we've got the updated numbers right now. No one else has this because no one else is going to be quicker. There's the revenue for the trailing 12 months, 42 billion. Net income, 12.8. See, record highs once again. Free cash flow is up as well. So now we go to our earnings. And this is based on averages. You'll see here that we've averaged everything out, and we're trying to see what the fair value is of Qualcomm. Based on discounted free cash flow model, it doesn't look like a buy. $81.39 a share. Let's just have a look at these numbers and see if these are fair estimates. Well, first thing that shouts out at me is this net to income margin. So what I'll do is I'll take an average of these ones here. The average is about 99%, so I'll update my sheet here. Next, let's just say 2020 was a bit of a down year and they're growing about 20%. Let's lower that a bit more, say 17. And then we have the net income margins. Net income margins are usually hovering about that. So let's just say they can get that at 30%. I think, well, look at that. That's actually a very different story now. If they can grow the revenue at that much, it's almost $300 a share. Let's just say that's a little bit high. Let's take out the averages of these once again. Averages of that is 24. And that puts them down to 236. And revenue growth, I mean, that's not a fair number. I think these are quite fair, to be perfectly honest. We'll drop this one a bit to about 95, but I still think in terms of free cash flow and where the revenue can go, this is not a fair, not a bad price at all. So $226 a share. Next, we want to have a look at the buffer Graham intrinsic value. This takes earnings per share and expected growth rate into account. Let's see the expected growth rate of Qualcomm, which you can find here on Yahoo Finance. And they're expecting about 14.34% for the next 5 years. So let's add that into my sheet, 14.34%. And wow, that has a fair value of $443 a share and a Graham price, which is if you see it at this price, a buy and hold at 332. So both of these models are saying it's a buy, but if we look back to how the market's reacting, they are a bit negative. This would put Qualcomm at the highest price it's ever been, but I'm surprised that it is liked by both of these models. Right, guys, thanks for watching. Please give a like on the video if you enjoyed it, and I'll catch you guys next time.